Hi, everyone, and welcome to the first show of the Integrating Investor on the Ayn Rand Center UK's website. I am very excited to be here. Thank you so much for joining me. I'm thrilled to be here, and I'm also a little surprised. But before we kind of do all that, unfortunately, this is an investing show, and we must start off with the with a disclaimer. And for that, I will throw up the disclaimer slide if I can figure it out. So, never smooth. So of course, everything here is just my personal opinion. It's not reflect those of my employer. It's not investment advice. This is for informational purposes only. You got to do your own work. If you have any questions, feel free to let me know. I don't think anyone will. This is not really anything new here. So anyway, and I'm not saying anything crazy. So don't worry. At least I hope it's not crazy. So anyway, welcome to my show. My name's Seth Levine. I am of the Integrator Investing website, Integrating Investor website. I have a blog. You may have seen it. I hope you've seen it. If not, I definitely recommend checking it out, of course. This is my new show, and I'm just very excited. Very excited to be here because I think at least I hope we'll have a different perspective here and something very different. And of course, the first question that comes to mind when even coming to a show is, and I thought this too, is another investing show. Like really, this is what we need to have another investing show. I mean, there are literally hundreds of podcasts and shows out there about investing and finance. And it's not like they're terrible. I mean, they're very high quality content with some really incredible people out there. I mean, just the amount of value that I've been able to get from watching, podcasts and these days is just incredible. So, and there's a huge diversity of content too, right? You're not just getting one angle, like trade ideas, right? Here's just a podcast. We're going to go through trade ideas, or interviews with star investors, for example, with these legendary investors who you read about in books. Now you actually have access to, and you can hear how they think. And I've learned so much over the years. There's also podcasts that tell you how to trade, right? Like if they'll teach you, right? It's an educational podcast. There are podcasts covering quantitative topics, like very esoteric mathematical formulas, programming, very high level concepts. And there's also great shows about fundamental investing topics, right? Well, just your very traditional, this is how I see the world, inductive, let's make interesting in investments. And these podcasts are free, and they're out there for anyone, and some of them have subscriptions. So if you wanted a higher level of service, you can pay for a subscription. So this truly is just a golden age of content, right? You can find whatever you want to find on the internet, and from just incredible teachers and mentors. In fact, like I have a backlog that's so long, like I can't even keep up with it. So why? So like, why am I here? Why am I doing this show? Why are you here? And quite honestly, I mean, what more could there possibly be to say? Like, what can I possibly add to this great tomb of content out there on investing? Investing is not some backwater, unknown topic. It's very popular, right? So that's kind of what I'm going to get into here. I'm very happy everyone's here. Before I really get into this, I just want to note that this is not objectivism by any stretch of the imagination. I am not an objectivist philosopher. I don't know what Ayn Rand would say on this topic. She has not commented on it. And quite honestly, I hope to really have a bigger tent than just an objectivist, kind of community, because what we're doing here is not philosophy at all. But really what it is, though, and what I think is unique about it is this is a application of philosophy, right? And I think that'll show itself, as we get going with the show. However, I will assume that people have some kind of familiarity with certain topics, and at least the vocabulary of it. So that's just my own context, and I'm probably bringing to the show. If you don't know something, there's a chat. Feel free to use the chat. We are going to monitor it. We're going to make sure that we are on top of you. So So please just chime in if you have any questions. We'll make sure. So without further ado, we are just going to go, we are going to move ahead, right? So why this show, right? I ask myself this question all the time. Why do I need this, right? Like, why am I going to sit here and talk about investing? And quite honestly, this is not something I set out to do. I'd actually thought about this maybe once or twice in the past, just given my blog, but I just realized there's so much out there and so much great content. Like what else is there to cover? But, lo and behold, like we're here, I just kind of ended up here. And this is not because I wanted to be here. It's because honestly, I think there's a void and I look forward to really filling it. So, as we kind of move, it's like, you don't know me at all, right? Who am I? Why am I doing this? Who is Seth Levine, right? So I'm not a famous personality. I'm not a famous wealthy investor. I'm not in any books. I have a blog. And there's really good reason to question my legitimacy for having a show to begin with, right? Why am I here? Why are you listening to me? These are precisely the questions that I want you to be asking, though, right? This is why I'm here. We are here to ask questions that are either may seem a little silly, like we should know the answers to them before, or they're just not clear in our head. And that is my story. My story is one of questions. So to establish some credibility, I am a professional investor. I have been for nearly 2 decades. And I've just seen a ton of stuff in my career. I've so-called covered a lot of different industries, a lot of different parts of the investment market. So I'm familiar with equities. I've been involved in corporate credit, and there's so many different kinds of corporate credit. I've been involved in derivatives. And I've been on what's called the buy side, right? So I grew up, in the sell side. So I grew up in a traditional Wall Street bank, a traditional Wall Street setting. And I've kind of moved over in my career to kind of another type of traditional job. And right at a time when all this kind of new content is going on right around me. So, so I've been sort of in part of this, part of sort of the professional investment a world. And for the earliest years to me, I'm going to be honest with you, like it never made sense to me. I would go into work and I would do the job and I would work my tail off for sure. I was engaged. I really enjoyed it. It was just, and I loved working a lot. I loved the people who I worked with, but just really didn't make sense to me. I saw we were doing all these things. We're coming up with valuations and price targets and very traditional, the same things that you see today, but it just didn't make sense. To me, just investing seemed to work differently than what we were doing. Now, of course, that's my professional career. Now, I'm also, a quote unquote objectivist, right? So I've been involved in kind of the, with Ayn Rand's philosophy of objectivism for those of you who don't know, for, I don't know, like at least about 10 years or so. So I'm not someone who discovered Rand when I was 15 or 17, a teenager. I was in my early 30s when I came to this stuff. So, and a really different way than most, but it's sort of, it's funny because I kind of came to objectivism and my views on investing in kind of the same fashion. And maybe that's why I really see objectivism as a tool, as a way to kind of apply it into my life and apply it into my investing career and hopefully try and get better at it. Right. So, just getting back to investing, like I said, for my first probably decade on the job, I was just doing what everyone was doing. I would go in, I'd have my Excel spreadsheets. I was junior, so I would take my orders for, orders. I'd be part of a team. I knew what I had to do, and I just kind of mimicked, what everyone was doing around me. I did everything that I was asked for, like really hard, like I was really into it. But still, I was questioning. Like there was a little bit of a something didn't seem right to me. So I had, lucky for me, I had this giant light bulb moment in 2013, right? 2013, as some of you may or may not know or remember, there was the 100-year anniversary of the Federal Reserve, right? The Fed, right? And at this time, because it was the 100-year anniversary, there were all these papers coming out about talking about central banks and the Fed, and like it pretty dry topic. It was nothing that I was ever interested in. I'm not going to lie to you. Just kind of all went over my head. But this was also the first time that QE was going on, and quantitative easing. And this was really, an unprecedented time in the markets where central banks were really getting involved in markets to a degree that they had never done so before. And I would see these papers on the Fed, and they were very critical. There were good ones and there were bad ones, but I'm particularly interested in the critical ones. Maybe for those are the ones that caught my attention, right? The papers that were critical on the Fed. So I would start reading them, and I would read about the history of central banking, and I would read about, the history of the Fed's founding, and the theory behind central banking. And then I would look at quantitative easing, right? And this was a time when the Federal Reserve, let's keep it to the US here. Sorry, everyone else. They were just buying tons of assets in the open market. And this was new. So naturally, there were a ton of, forecasts in terms of, well, what does this mean for markets? Quite on, I was curious, are we going to see giant inflation, right, coming out? Is there going to be, is it going to save the economy? Is it going to make the economy worse? Is the US dollar going to crash, right? There are all these prognostications, and it really just, I was combining that. I was combining this view of the Fed and my observations in terms of whether or not these were kind of playing out. Then I had the views on, I had all these like new papers that were totally new perspectives on the Fed. And then at the same time, don't forget the podcasts were just exploding, right? I mean, there were so many podcasts. These were people, and I'd worked on Wall Street I still was working on Wall Street for a number of years. I never heard these kind of perspectives before. And now we kind of take them for granted, but they were new perspectives. So I was integrating all these different pieces of information combined with my own sort of skepticism, for lack of a better word. And they really just validated all my suspicions. So really, I just set off and I just consumed everything I could. I mean, I was just like, I was like a garbage can, in a sense, right? I was reading, some very, you check out my site, you could see all the things that influenced me, but I was reading economists, kind of old economists, kind of Austrian, like the von Mises of the world. I was reading new economists like John Tamny, who has had a huge, profound impact on me. I was reading the Objective Standards articles. I don't know if you guys get your hands on them, but there's some fantastic articles by Richard Salzman out there, or at least maybe there were some, but he had some great articles on central banking and its purpose, and how does gold fit into that. And of course you have Rand, right? And Rand herself had written on the economy. And then you had like the early Alan Greenspan, who to me is a completely different person than the modern day Alan Greenspan. And he wrote some great papers, on gold and freedom. And, the more I read that, I would just read all this stuff, kind of unique perspectives. And then I would try and talk about it with people at work. And I would talk about it with colleagues, and I would just talk about it with my circle, with my circle. And I just started to realize, this perspective is different, right? There's something different that I'm doing. I'm not saying it's good. I'm not saying it's right. I'm not saying anything except the fact that it was different. So I was kind of curious. So I was like totally dialed into this. So 5 years later, lo and below, I start blogging about this, putting out a new perspective. And then lo and behold, here we are, we're doing a show. So it has been really, 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 really interesting. So getting back to sort of my objectivist origins, my investment path really mirrors that of my objectivist path, right? And it really all starts with observation, right? So with objectivism, it was why capitalism, right? But why is capitalism? Yeah, I'm looking around. I'm just I would call myself a very traditional kind of center of the road kind of political thinker. We want markets. We don't want too many we don't want too much freedom in markets. So we want to, we just kind of want to keep things regulated and not have too much freedom. So, but I saw capitalism and I was like, okay, but why America versus, what's the difference between America and Europe? What's the difference between North and South Korea? So I came to capitalism. So I wanted to learn more about capitalism. And, a friend of mine said, if you want to learn more about capitalism, you should check out Ayn Rand. I'm like, who is Ayn Rand? So ironically, I started reading Ayn Rand, nonfiction. I was listening to podcasts, again, like golden age of entertainment, right? Of content, I should say. Listen to like Yaron Brook and the fantastic stuff on ARI. There's all sorts of great stuff out there. And then I just started with the questions of why this? And then, so it's really just been my relentless pursuit of the truth. I mean, even if it doesn't come out to be the truth, it's just that drive for the truth that I think is really brought objectivism and investing kind of on this collision course. And one thing I've noticed is I've been willing to throw out everything I thought I knew about everything, and that's very, very uncomfortable. I mean, I threw out kind of this altruist kind of very centered background and took this radical stance in terms of objectivism because I thought it was more true. And the same holds true with investing. People would just, there are ways of doing things, but however, I just needed to question everything for some reason. And, when I did, I started realizing that some of those ideas are wrong, right? And this, again, is both life and investing. I realized that many of the views that I was taking in investing were mainly heuristics and really had no framework, right? And that was just terrifying to me. It was terrifying, like objectivism was terrifying for me to like throw out everything that I thought I knew. So I really just started from scratch and built myself up, built up my knowledge base, I should say. And that's what I think is interesting about my approach. And I hope that you guys stick through it stick with me through it, is that my approach is very metaphysical because I had to start at the beginning. What is investing? What does that mean? And we need to know what investing is because we ought to know what something is. We ought to know, will dictate what we ought to do, right? Is ought, right? So we seem, and I saw all these different investing styles come and go over my career, right? We have value investing that worked at certain periods of time, and it's been miserable for others. Trend following, right? That was really big for certain period of times when markets trend, and then other times when they don't trend, can you use that? It starts to fall apart a little bit. And these days, everyone's volatility trading, right? But eventually that'll come and go as well, right? And what I realized is just a lot of people are mindlessly doing, and that's too harsh, but people are just doing what they're taught, right? And that's kind of one camp. It's like, I am a XYZ investor, right? It's very almost deductive in a sense, right? They label themselves as a type of investor and that's what they do. And then there's other people who are almost they're pure empiricists, right? They're driven by the data, right? But they're afraid to kind of take the data and draw concepts from it. So, I think the right approach in my view is to kind of take both, right? You have to look, and this is the objectivist epistemology for those who are familiar, right? You have to have a theory and you have to validate it in the world, right? And likewise, you can take data and build up into theories. So I basically found out, the hard way that everything I thought I knew about investing was wrong. I mean, and these are things that I hope to really cover on the show. I mean, investing itself, the whole concept of investing, I had to rethink. What are prices, right? What do prices mean? What are markets, right? What's the relationship between markets and economies, right? What's central banks' impact in markets and economies, right? What is money, right? I mean, everyone, you think you know what money is. Quite honestly, I thought I knew what money was, and I thought it was a pretty boring topic. I totally changed my view on money. Volatility. right? What is volatility? What is collateral, leverage, momentum, value, trends? These are all ideas that most people have some notion of that I literally had to start. I had to kind of start from the beginning, right? So that just takes us like, right, if I can do this properly, right? So we're back, right? We are at the beginning. What is investing, right? I mean, let's start from the very beginning. I mean, that is this is paramount. What is investing? And it sounds easy, but it's actually a pretty tough question to answer, right? No one ever says what investing is. It just sounds simple. If you want to ask someone what's investing, like, what do you mean what investing is, right? But we know, right? If we want to start to build a knowledge base, we can't assume knowledge. We have to start with very clear definitions as the base of our knowledge hierarchy, right? Now, Ayn Rand, again, her epistemology was incredible, right? And her observations there, which was we build knowledge from knowledge. So we're only as good as our base layer of knowledge. So it's very important to get this right. So if we think about what investing actually is, I mean, it's pretty simple, right? It's not discounting cash flows. It's not looking for undervalued securities. It's not, I don't know, outpacing inflation. It's not earning a yield. It literally is making money from money, nothing else, right? Investing is a process of making money from money, right? And there's a lot of ways to make money in the world, right? You take any business, right? Really how most people do this, most other industries, is they take some kind of raw material, they do something to it, and they transform it into something of higher value, right? Just think, let's use the iPhone example, right? We love the iPhone example, right? Apple is taking a bunch of phone components, they're taking a bunch of software, tons of engineering, tons of know-how, right? Just tons. But then they put it together and they sell you something else. This is not what investing is, right? Investing is nothing like that. Investing is I take money, I do something with it, and then at the end, there's money. Totally different, right? And really it transpires, over time is really, how I think of it is you take money and then after some period of time, you have more money or you have less money, right? There is a time component. Time is critical to investing. So that is another thing. We know investing is money and time, right? And really, if you think about it, it is the act of selection, right? So investing is an act of selection. Now I think this is pretty unique, right? There's nothing else where selection is this important, right? Selection is paramount to investing because there are very few moving pieces. You don't need to worry, where do I put my plant? How many employees should I have? How many software engineers do I need to have? What's our marketing strategy? No, it is, I have something, I have capital, I'm going to buy it, right? What is the question? And then I hope to have more at the end of it, right? It is the only component what you select. And this heightens the importance of all those decision-making process around that selection process, right? What do you own? How do you own it, right? You can actually just buy it, or do you, let's take gold, right? Do I buy gold? Do I buy bars? Do I buy futures? Do I buy an ETF? Do I buy a gold mining company, right? And then when do you buy it, right? There's time, should I buy it now? Should I buy it next week? Should I buy it before the Fed meeting? Market strong or market's weak, right? So it's a very intellectual exercise, and it is an intellectual exercise because you only do investing with your mind, right? You only do investing with your mind. And this is very, very unique to me. We can really break it down. This is kind of how I think of investing. There's a very simple investing component, right? Equation. You have existing capital plus time, right? And then you have your ending capital, right? It's very simple. So really, when you think about this, what is investing? It's really just a study of time. And not just the study of time. but kind of what happens over that time, right? Because really, like, what is our task as an investor, right? Again, we buy something, or let's take short sales or anything else out of it. We buy, we take our money, we do something with it, some time transpires, and then we have a result, and that is it. So when I really think about what is our task, right, as investors, what are our tasks, it really comes down to these bullet points. What happens, right? Because we're going to take, we're going to take our capital and we're going to commit it. And then it's going to be what happens. Okay. Well, what happens to what? Oh, okay. Well, now we have to figure out what happens to what. Okay. Well, what happens to what, but when, right? So now we're, okay. Oh, what happens to what and when? So now when enters the equation. So we're at what happens to what and when. But also how does it happen, right? And now, I mean, so now there's a how component, right? What happens to what and how all of a sudden, right? What happened, but it's not just what happens to what and how, because all these things could happen. Let's say price of gold went up, and it went up, over the past 3 months, and it went up pretty violently. Like, oh wow, well, depending on what you owned and how you went about that investing, different things would have happened, and your return would have been very different. But that's not even it. If only it was that easy. We also have to figure out what happened to what, when it happened, how it happened, and the most critical part that I think most people forget: what are we going to do about it? Right? That is the art of investing. Investing is what happens to what, when, how, and what are we going to do about it? And this is what I hope to do here. This is why I hope you'll join me on this journey. I think this is a unique approach. I hope you think so too. And this is why I'm doing the show. And I think, with that's been a mouthful. Hopefully, we can get some chat questions going. If you have any questions, feel free to use that chat. Feel free to use that. Super chat function. I'd love to kind of know what everyone thinks, but this is the direction that I plan to take the show. I'm super excited about it, and I hope you are too. So if there are no